What is going on? Welcome back to the channel. So today we're going to talk to you about SoFi. I want to go over some of the data points, break it down, what moved it, and go over everything else that you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So SoFi went down 5.43%, 26.38 the low, 28.80 the high, and we did see a lot of volume, so 72 million shares being traded, although not all of that was coming from institutions. Most of that did come from algorithmic trading. So today did very much remind me of this. So for those of you that kind of tune into a lot of my videos, you would know on October the 10th, when we had that crazy sell-off because of the whole China and the States going back and forth, that's when it kind of started. I mentioned that on that day, most of the volume was just artificial. It was coming from algorithmic trading. So institutions weren't really the culprit, what caused all that to push lower, no different than today. So today was rather frustrating / comical because to see the portfolio and everything go down, but all of this, in my opinion, was artificial. So I'm going to go over the flow and so forth near the end of the video, but all of this was rather interesting. And what really prompted all of this was Netflix's earnings. So their subscriber count came into question, as well as their margins. Market didn't like that. And I think just generally the market had too high of expectations for Netflix in general. And one thing as well to bring up why this is so comical is Netflix's earnings did occur after hours yesterday. So that didn't spark any sell-off. During the pre-market, that didn't spark any sell-off. Once the market did open, that's when people start to panic. So this is another common strategy that I've brought up that has been happening a little bit too frequently, if you ask me. But what happens is once the market does open, institutions buy puts, and then that way they're able to really sell the stock off, whether it be they sell their own stock or potentially through algorithmic trading. That way their puts do appreciate, they make bank off of that, and then they are able to close out their puts and we're kind of let the stock price move higher. Happens all the time. So today was, like I said, kind of comical, but at the same time, kind of frustrating because just generally none of this was really justified. There was one data point that kind of came out that wasn't really all that great, and that was the MBA purchase index. So it kind of signaled that people weren't really getting mortgages as much as obviously the last report, and that seems to be a little bit more of a growing trend. On a side note, one thing that did happen today, roughly around 20 minutes ago, we just moved back to the extreme fear category. So we're kind of bouncing back and forth right now between the extreme fear and fear. So we're back there. So kind of interesting stuff. When it comes to SoFi, there was no news, no SEC filings, no analyst ratings. So it was purely just piggybacking off of the broader market, which again, in my opinion, was just artificially being suppressed. Shorts, they did return 25,000 shares. 9.29% of the free floats being shorted, works out to be 109.4 million shares overall are being shorted. And I actually do really like to analyze this data, only because, as I brought up, there is more than enough ammunition for shorts to really double down. So if today was like the end all be all, the start of a bubble, what a lot of people are saying that is starting to pop, shorts would be like easily like candy, like Halloween and all. You guys get what I'm saying. Like they could easily double down, but they're not. They're returning. So in my opinion, this also does verify that today wasn't really justified. So again, something to keep in mind. Looking at this right here, we did have 79 million in calls, 15 million in puts, a lot more puts than what we previously did have. And so 47% of all the options being done today were bearish in nature. Again, goes back to that whole strategy that did happen. Net premiums did go down about 7.3 million. Aside from that, from a bull standpoint, you see a consensus for it to still have clearly FOMO for the rest of the week, for it to get to around that 28.50 to 29. Bears are anticipating for it to be sub kind of 26. So they are anticipating more volatility. Right now, the market is digesting, I guess, Tesla's earnings. Plus tomorrow, we do have a lot of big data and big companies unveiling their earnings. So that could cause some volatility. So even though most of the volume did come from algorithmic trading, doesn't mean institutions weren't trading it, because we still did see some big transactions. So 46.7, 8.2, 6.1, 4.09. These are some of the big ones that did occur on the secondary market. On the dark pool, we have 13.9, 10.9, 4.05, 4.04. So those are some of the big ones on the dark pool. And if you can kind of look at the timestamp, most of that was in the early morning, so the first half of the trading day. And if we kind of, this is the bad thing, I guess, about dark pool, is you do have to take a little bit of time to research whether these were buys or sells, and you have to kind of correlate this with the stock price just to see what was happening at the time, as well as kind of look at some of the transactions before and after, just to see kind of what was a sell. So for instance, going over here, you can kind of see how this went from 27.19 to 27.19. At the time, the bid and the ask was at 18.19, so it is fair to assume that the 400,000 right here was a buy. But obviously, to take the time to go through that line by line for all the big transactions, that is very time consuming. But aside from that, with it right now at 27.19, it is trading between this R1 and the pivot. So I'm looking at the 1-day chart, so very strong support and resistance points. 26.81, that's going to be that key support level. You really want to watch for that to hold in the next couple trading days. If not, you could see a little bit of a pullback to that 24.29. Based on the Elliott Wave technicals, it does have a pivot point of 26.14. So for as long as we are below that, then it is anticipated to get between that $22 and $23 range. If it can hold that level, then it does, based on this, it does anticipate a nice recovery to at least that $32 range. So that coincides with their earnings. So we'll kind of have to wait and see how that does all play out. But today was kind of an interesting day. So give yourself a shout out if you did buy the dip or whatever else. But today we did bounce off of that 50-day moving average for the 4th time in almost about like 2 weeks, a week and a half. So definitely interesting stuff. And I think SoFi's technicals are holding up like a champ, a lot better than a lot of other stocks, even though today was a little bit more volatile. But I think just generally comparing over the last quarter, SoFi's done phenomenal. But looking at the market position, comparing today versus yesterday, it seems like you have a little bit more willing buyers between that 26 and 26.50. And so it kind of bounced off of that general area, and most likely that's exactly why. And that's kind of around that 50-day moving average, but you do see a lot more willing sellers. So again, something to keep in mind. Looking at the flow though, this is where you can clearly see algos were the majority volume easily today, and every single stock was the exact same thing. So I do quite a few different videos, different stocks, different sectors today, multiple different channels, and all had the exact same kind of outlook from the flow. So like I said, today was just artificially being suppressed, and if history repeats itself, especially what happened last time, which was on October the 10th, then we should see a nice recovery possibly over the next couple of trading days. But Friday is going to be a big one with a lot of big data. So we have CPI, we also have Michigan consumer sentiment and so forth, and also a lot of big companies. So it should be a fun time. But if you do believe in SoFi, especially with this upcoming earnings, then just all cost average. I've stated that many times in the past. Very difficult to catch the peaks, very difficult to catch the bottoms. Best thing to do is just dollar cost average. Let me know your viewpoint on that. There was surprisingly no new analyst ratings. So when I saw SoFi was getting hit a little bit more than a lot of the other fintechs, I would have guaranteed that some bearish ratings came out, but surprisingly nothing at all. So I think algos were really just punishing SoFi a little bit more than other stocks, which is rather odd. But let me know your thoughts on SoFi. Give yourself a shout out if you did buy, if you sold, or have you started to do some options for this upcoming earnings. Just to give you a quick overview of this, so some of the unusual options from today, we do have, looks like about 3 or 4 that is for this upcoming Friday, most of which are kind of bullish right here. You do have one bearish one. These are all single leg transactions on a side note. That's why I generally like to look at single leg and out of the money for the most part. And so this one right here, there was a $30 call that was sold, and that is for November 21st. So that's being seen as bearish. Premium was 281,000. So that could be, of course, a covered call behind that. And then for the most part, it looks like kind of evenly divided between bullish and bearish. So let me know your viewpoint, and if you started to do options, give yourself a shout out. One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades, worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.